please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Manipal has sweetened its offer for Fortis Hospital. They revised the terms to acquire the hospital business as well as the diagnostics unit. Ekta is with us. Ekta, well, this announcement came in the last few days. You're looking at the stock. The street was sensing this, I think. The stock moved from around that 115, 118 rupee mark all the way to around 145 in yesterday's trading session. Pull up the intraday chart. That'll tell you the picture. But tell us about these, these new details that have come out.
Well, it's definitely positive. And as per my sources, there have been talks which have taken place with all of the key shareholders to understand what exactly the grievances were. So one of the key grievances was that eventually this would just become a holding company. Fortis would become a holding company, and they will be only holders of around 36% of SRL. So now what will happen is that basically the SRL Diagnostics, the private equity players will sell 30% of their stake, which is they will exit the company entirely to Ranjan Pai, where it will be in the private capacity as per my understanding. And eventually there will be a possible merger of the two entities, Fortis and SRL, and the 50% plus will be held with Fortis. So the listed entity that you see post the swap of the hospital business will basically become a key diagnostic business, with Fortis still holding over 50% and the remaining 30% will be held by Ranjan Pai, who will then become the promoter of the company. So that is my understanding for the SRL Diagnostics. So immediately a holding company discount goes away. Secondly, the hospital valuation business, now both entities are valued the same. Earlier it was valued, Fortis's hospital business was valued at 5,000 crores. Manipal was valued at 6,070 crores. Now there is a 21% hike in terms of the valuations. So both of them are now valued at the same level. So that too is positive. Now separately, what happens on the onset, and for example, if there is an IHH open offer, we understand they were doing some legwork for it. Whether or not there will be some amount of contest by the minority shareholders to this particular revised deal, that will be something that we need to see. But they've definitely sweetened the offer for them. Let's see whether it passes the muster.
The Lal Street, it was a range-bound trading session. The Nifty reclaimed the 10,400 mark, and in fact the Sensex gained over 100 points in trade. In fact, we had a mild outperformance with gains of close to around 0.5%. The mid-caps, though, for the second day running, they were underperformers with gains of only around 0.1%. Rima joins in early this morning to run us through how all the cues are stacked up. Hi, Rima. Good morning.
Hi, Nigel. Good morning. Well, the global cues are fairly range-bound and, tepid, so they're lacking any further incentive to go up from here on. But our own markets have been showing some positive momentum. In fact, the Nifty is closed in the green in 8 out of the last 10 trading sessions. However, now we seem to be approaching some amount of just near-term resistance. So the 50 as well as the 100-day moving average are converging around that 10,450 mark, and the markets are almost over there. So that could act as a bit of a resistance. And also remember, the Nifty topped out in February around those levels. So at least in the near term, it could act as a bit of a resistance. And keep an eye on the bond markets. Yesterday, Nigel, you only highlighted how the bond yields have hardened by about 19 basis points in the last 3 days. And that too could act as a bit, put some pressure on the banking stocks. That apart, crude oil prices have been on the boil. So Brent crude is now approaching the $71 per barrel mark as tensions over Syria rise. So a combination of these factors could put a lid on the markets, or at least act as some amount of resistance in the near term. Focus will be on the March CPI data. That's on Thursday. It's seen easing on a month-on-month basis for the month of March at 4.2%, according to our poll. Yesterday, the big movers were Axis Bank and ICICI Bank. In that, ICICI Bank saw delivery-based volumes of close to about 315 crore. With respect to the flows, evenly matched. So the FII sold about 685 crore. That was matched by DII's buying about 654 crore. In separate news, Singapore Exchange will be listing new India equity derivatives in June 2018. Remember, NSE, just a couple of months ago has said that they will no longer allow the India rates to go live on SGX Nifty, where a lot of trade was taking place. And now it appears that an alternate product has been, a Singaporean exchange has come out with an alternate product, but it means more of the same. Just the volumes which are on SGX will now move to these new products.
Okay, and stocks, Rima?
Well, Ekta, you were just talking about Fortis, so that's clearly going to be the big stock on our radar as Manipal-TPG combined sweeten the offer for Fortis, offering them 21% more. Fortis will now hold a majority stake in SRL, which means the earlier concern about having a discount, a holding company discount, will go away. MGL is the other stock of Mahanagar Gas you need to keep on your radar. That's because BG will be selling a 12.5% stake at a price of 905. That's a 4.2% discount to where the stock closed yesterday. The base size is 670 crore with an upsize option of 447 crore. Indiabulls Real Estate should also be on your radar, where they've signed up for an office project with Oricon Enterprises in Mumbai's Worli area. Phoenix Mills, where Canadian Pension Plan Investment Board has completed a second tranche of investment in the company's subsidiary, which is Island Star Mall Developers. They would be infusing about 938 crore. M&M Bolero has recorded the highest sales since launch, and it's outperformed the UV or the utility vehicle industry. So M&M could see some boost on the back of that. Blue Star had plans to set up a new plant in J&K. They've scrapped that because of lack of fiscal incentives. AU Small Finance has increased the interest rates on their savings account by 50 basis points for savings, which are between the 10 lakh to the 10 crore mark. And PNB, Fitch has downgraded its viability rating to BB-. Back to you.
Well, on to a CNBC TV18 exclusive news break. Stung by Nirav Modi and Mehul Choksi's exit, the government has stepped up action against defaulters. Sources say that a recent meeting of the empowered group of investigative agencies, the centre took stock of the NPA picture. Timsi Jaipuria joins in with the details. Timsi, fill us in. What happened at the meeting?
Well, that's right. What I understand from sources is the fact that in a recent meeting of empowered group of investigative agencies, which was headed by Finance Secretary Hasmukh Adhia, the investigative agencies have decided upon a new operation where they will keep on taking a status check of NPAs and list of defaulters from banks and RBI. They will match it with the list of frequent travelers with civil aviation and MEA, seek details from MEA on the case of what is the travel history of that person, why is he flying to XYZ country on a regular basis, and check with those countries what is the business interest of that defaulter with those countries. Also seek details like whether that defaulter was filing tax over there, whether the defaulter holds companies in those countries, and then check it with the list of defaulters and the tax history in India as well. They will match all this and then take a further step on investigation. A recent example of this was when the IT department has been taking a lot of raids at 16 locations of Diamonds Power Infrastructure Limited, where Sumit Bhatnagar and Amit Bhatnagar are the two alleged people who have been money laundering through Mauritius and Dubai route. They have a loan of about 2,500 crore rupees by various PSU banks, which is an NPA. So all in government is in all taking all the steps to curb NPA and money laundering.
All right, then former SEBI chairman M. Damodaran has reacted to the ICICI Videocon case. In an exclusive conversation with Shireen Ban, he said that the bank's board should not have jumped the gun and should have appointed an external body to probe the case. Let's listen in.
Reputation risk is written all over this series of transactions. You cannot have a bank which is the repository of faith and trust, not to mention money, suffer reputational risk of this nature and not be seen as addressing it. Because no matter what the reality, there is perception. And perception is what hits reputation far more than even reality does on occasion. So the reputation risk is huge. I also want to add this, that the mitigation for reputation risk resides at the level of the board and nowhere else. There are operational risks that reside where mitigation might reside elsewhere, but reputation risk is in the domain of the board. And the board should have been seen not as defensive, not as explanatory, not as, saying, okay, we've looked at this and we think there's nothing wrong. But say, okay, while we may believe there is nothing wrong, we are reaching out to an external agency, and there's no shortage of agencies who will actually do an objective study and give you this.
Okay, well, on to another development in the Videocon case then. The co-promoter of Videocon Group and the brother of Venugopal Dhoot, Rajkumar Dhoot, was spotted at the Finance Ministry yesterday. Sources say he may have held a meeting with officials in the Central Board of Direct Taxes.
The result season is upon us again as Q4 earnings will start to trickle in later this week. Lata is with us to give us what we can expect and what will be the key negatives and positives for the quarter. Lata?
It's going to be another desultory quarter. We are not getting that long-awaited double-digit growth. We understand from experts, Sensex earnings maximum 9.5% or thereabouts, and Nifty earnings a max of about 7%. Negatives, this would be the 7th consecutive year of single-digit earnings growth, and this is a single-digit growth despite an advantageous base. That is, last year, 2 quarters were affected by demonetization. Even then, we are not able to generate double-digit growth. It's a bit of a negative, but the positive, of course, is that definitely companies are talking to us about rural consumption. Consumption companies are talking to us about capex. There is early signs. And of course, now it does look like we are on the verge of double-digit growth in FY19. Let's hope it's 20%. At the moment, that looks ambitious.
Okay, all right, Lata, thanks very much for that. Also, Prashant is here to take us through the potential winners and losers in the earnings season this time round.
Just very broadly putting companies into buckets where, I mean, there could be potential winners and potential losers. And when we say winners and losers, it's both in the relative sense. I mean, result season is always about what comes and what is expected, but also disappointment in the absolute sense in sectors where there is no recovery, or maybe the strong performance continues. So it's both relative and absolute. These are the potential winners. First up to start with, autos and consumer goods. I mean, those are 2 sectors which have been strong now for quarters on end. So a strong sort of performance expected there. Industrials, I mean, we've been discussing now for the last couple of weeks the fact that things may seem to be picking up, and it's got the advantage of low base. Metals, I mean, across the board, price increases have continued, so results should be multi-quarter high or all-time high results from the metal sector. Potential losers, on the other hand, I mean, some of the known suspects. So telecom, again, no real reason for any recovery. IT, I think one will have to sort of watch closely because stocks have run up quite a bit. So if results disappoint, what will happen? Real estate, there is no real big recovery, at least on the residential side. Pharmaceuticals, I mean, troubled space. Stocks are beaten down. Infrastructure and media are the other 2 areas which will be potential losers as far as this result season is concerned.
Well, we spoke to a couple of experts like Nishal Maheshwari of Edelweiss as well as Gautam Dugad of Motilal Oswal to list out the key expectations from the 4th quarter. Let's listen in what they had to tell us.
The face of it doesn't seem to be that there is going to be any kind of a wild card in the current quarter. I think the sectors which are supposed to do well are pretty well defined. I think commodities is going to do well, basically both on the oil side as well as on the metals. The FMCG, the consumers, autos, I think these are 3-4 sectors which will continue to do well. Sectors which are not expected to do well, domestic investment, exports, especially pharma, and PSU banks and telecom. I think these are the sectors basically which will disappoint the market. We continue to like the large caps, given that the valuations on the large cap IT is still much interesting. 2 topics out there are Infosys and Tech Mahindra in that order. And in the mid-cap space, we like Persistent, but we definitely like the large caps over the mid-caps.
I think market is not, very precariously poised, I would think. Secondly, in terms of numbers, we are expecting around double-digit earnings growth. So we are expecting 11% for our universe and around 13 to 14% for Nifty earnings growth. Within the broad spectrum of sectors, again, consumption is looking extremely good. Autos will have a blockbuster quarter. NBFC will continue to have another strong quarter. We are expecting strong performance in consumption. We are expecting commodity space to do well, both metals and oil and gas, and in fact utilities also, given that Coal India is expected to do well. Preference continues to remain with retail private banks. In fact, in our model portfolio, we've introduced IndusInd Bank, we've replaced Federal with IndusInd, and we have reduced the overweight of ICICI Bank marginally and added that to the other retail-oriented private banks. I think the real game in financials is happening in NBFCs, where there is going to be another quarter of 30% plus growth, and this has been like the 8th or 9th consecutive quarter where the earnings growth has been extremely steady, and it's very broad-based. I think barring LIC Housing Finance, we're expecting very strong performance across the board, and with bond yield softening, you will find significant interest coming in that space.
Okay, well, moving on to a CNBC TV18 exclusive then, Kritika Saxena caught up with the management of Arvind and began by asking about growth outlook of the brand's business and the road ahead. Listen in.
If you see the kind of growth which we have for brands, on almost a 4,000 crore base, we are growing at 20%.
Yeah.
And in textiles, on a base of 6,000, we are growing by around 8 to 10%, around 6%. But we intend to grow by 10 to 12% or 15%.
Okay.
So these will be the two major growth drivers.
I want to understand the outlook for Anup Engineering. So let me bring you into the conversation, Puneet. In terms of the scalability over here, in terms of the kind of revenue growth and targets that you can look at, tell me what you have in mind, even from a margin perspective. Once the demerger does go through, once the listing is done, what's the scalability that you have in mind?
So there are, two steps to the story. I think for the first step of taking the business from where it is currently around the 200 crore mark, going to the 1,000 crore mark should not be, difficult in doing exactly the same things that we've been doing. So more of the same can get us to 1,000 crores. So the next...
By when?
In the next 3 to 4 years,
3 to 4
I would say.
Arvind Fashion's 3-year target from a number perspective?
So we are looking at achieving a 9,000 crore number in 5 years. So it's around a 20 to 22% cumulative growth rate moving forward, powered with the current portfolio we have.
Kulin, the kind of power brands that have come into India through Arvind have been significant. How many by 2020? What's the target that you have in mind?
So we already have, 4 brands that we ourselves call power brands, which are more than 300 to 400 crores. I think we would be adding 4 more within the time frame that you mentioned.
Within 2020.
We will have around 3 to 4 brands which are more than 1,000 crores by 2020, and we will have 3 to 4 which are more than the 300-400 crore mark by then as well.
Are there any businesses that you would want to look at divesting? Are there any areas where you would want to consolidate?
Not as of now, because each one of them is having extremely good traction. See, another thing which is happening is that when we are segregating these businesses and letting them go on their own, we have a set of investors who are interested in that business.
Kulin, any newer areas within real estate?
The theme for us is we've kind of delivered around 2.5 million square feet over the last 5 years. We're into a strong acceleration, so much so that in the next 3 years itself, we are going to be delivering 8 million square feet.
All right then.